Hey, good morning, everybody. It is Friday, March the 10th, 2023, and today is the day that the labor reports come out for the month of February, so we can kind of take a look and see what happened. If you remember on Monday, we had discussed that there was a bearish morning star pattern about a month ago, and we saw that rates kind of crept up over that period of time. On last Wednesday, Thursday, Friday, we had what's called a bullish morning star pattern. And that's sometimes an indicator of a market reversal and that we could see rates getting a little better. Now, there's a lot of factors that kind of come into play. Obviously, employment, inflation. So let's take a look and see what happened in the last week based on what I had said we might see. So here's the chart that we're looking at. And one thing you'll see, this is where we had the bearish pattern and we had the rates go up. Now remember, when bonds go down, rates go up. Here we had the bullish morning star pattern. And interestingly enough, on Monday we saw rates get a little bit better. Tuesday, Fed Powell kind of took the punch away from the party and said that they may have to raise rates more and faster and have a higher target. The market did not like that. And then if you see the follow through, the following day, rates even went up again. And then we saw a little bit of reversal yesterday where we kind of came back to those levels. And this morning, we had a big jump. The unemployment numbers went from 3.4 to 3.6. So it's kind of one of those odd things where bad news for the economy is kind of good news for interest rates. So you want to see that. But I don't think we're done. I think we're going to have some more news that's going to help rates in the next month or so. And I'll tell you why. The housing numbers that get rolled into the inflation, I think we're going to see that have a bigger impact coming next month. As housing prices started to cool a little bit and flattened out, that is the single biggest component in the inflation number. So I think as we see that kind of tailor off next month, we'll see the inflation number come down. I think that's going to be a plus for rates as well. So I want to tell you one other thing about the labor market. We're going to go back and look at this chart for a second. Here's the big thing with labor, and one of the reasons why labor's been so strong is the fact that hospitality, if you look at the hospitality industry and the drop-off that happened in that industry after COVID hit is incredible. But if you now look at what's happened since then, the number of jobs has kind of come almost back to where it was. Now, I'll tell you why that's so important is one of the big components of obviously the inflation number, or rather the labor numbers, is in the component of hospitality. Hospitality has been adding about 100,000 jobs a month or more to the employment report. So as that number starts to level off a little bit, I think we're going to see a little bit weaker labor reports in the coming months. And again, that could help interest rates. So stay tuned. I'll be back on Monday, kind of give you an update of what we expect for next week. Hope you have a great weekend, everybody.